Hey, good afternoon. Welcome back. Today is Friday. Yes, sir. 6th day of May 2016. Let's take a quick look at the numbers. We'll keep them up. There we go. All right. Get a refresh. S&P 500 down just over 6 points. The NASDAQ down 27. The Dow down 20, and the Russell 2000 down 3.5. Crude oil, on the other hand, is up almost 2%. And that would be 82%, trading at 45.14. Gold up $21.30. Now, who was that just the other day intimating that the gold rally was over? Well, that doesn't look like it's over at all. Up over 1.5%, trading 1293.40. It's seen better days, it's seen worse days. So this is a good day, up 21 bucks. Like it. Okay, let's go to Asia. Color of the day is red. The Nikkei, wow, you know, after a $600 or 600 point down day, a 600 point down day, and a 500 point down day. I think there was another 6 thrown in there. Today the Nikkei is only down 40 points. So maybe the slide is coming to a halt. Shanghai down 84 points. Hang Seng down 339 points. That's our $100 billion baby, down 1.5%. Last but not least, Europe, where the DAX is up 18, FTSE is up 8, and the CAC 40 is down 18. DAX is up 18, and the CAC 40 is down 18. So that's it. That's the numbers around the world. We're moving quickly today because Michael's got to go do the planes, trains, and automobiles. So, Michael, if you're ready, take her away.
Okay. I am ready. All right. Let's bring that over here and put it up there and get this out. There we go. There we go. All right. Dwayne, by the way, the workshop is loaded into Vimeo. Ready to go. And I will send you that too.
Okay, I'll take care of it.
Okay, and I just sent you a text message about Rossi. Okay, here we go. Why is it taking so long? My recording thing to turn on. Hang on. There we go. Okay. For the last couple of days, I don't know why, but when I hit the record button, it freezes everything up. All right. Good afternoon, everyone. Today is Friday, the 6th day of May, 2016. Today in the live trading room, we made 3 ticks on the euro, 1 tick on the YM. We lost 1 on crude. We made 31 on gold, and 6 on the soybeans. Took us 22 minutes and 2 trades to get to our goal for the day, and we took a total of 16 trades today. So I forgot exactly what we're up. I think $388.75 or something like that. And that was in 16 trades. On the month now, we're up $2,146.25. You should have mine now, Bar. You should be seeing my screens. Okay. Yeah, in the month we're up $2,146.25. That's over 5 trading days. And we're averaging $1,429.25. So with an $8 commission, we're up $1,554 net. With a $5 commission, we're up $1,776 net in the month. That's over 5 trading days. On the year now, we're up $22,102.50. That's over 84 trading days, averaging $263 per day. if you have not taken a free trial with us, there's two ways to take the free trial. One is to go here to CFRN.net. In the right-hand column where it says register for a free trial, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click the confirmation link. Okay, if you don't click that confirmation link, you do not get the free trial. The other way is to go, oops, not there, is to go here. Go here to apply.cfrn.net. Happy Friday, John. Go here to apply.cfrn.net, and all you have to do here is just fill out the form. Okay, just fill out the form, and you will be sent a confirmation link. Okay, so back here, I'll slide that over there, and there we go. Yeah. All right, so let's get into the trades now. On gold here, on the gold, we had, let me get my list up. Gold, we ended up with plus 31 ticks today. This one here was, I was using this for an example, but I only made a couple of ticks on that. Let's go back to the beginning. All right, now right here when the market opened up, gold was barely trending. That's why I drew all these trend lines. But then it turned around, came down. We missed a short trade there, a short trade there, a long trade there. We finally got a long trade here for 3 ticks profit. The next trade we took was over here. We got 4 ticks profit on that, putting us at plus 7. Then we got 7 ticks profit on this, putting us at plus 14. Missed a trade right there. We got 1 tick on that, putting us at 15. We got 10 here, putting us at 25. 2 there to 27. And 4 there to 31. That was where we stopped trading the gold. Now there was a bounce off the BBC right here during the break. Nice bounce off the BBC right there. Then it dropped all the way back down, giving a shorting opportunity right here that would have been a break even for me. And then it got pretty messy. I would have said no trend until right here, and then no trade. Okay, so that was it on the gold. We were plus 31 ticks on the gold. Okay, on the YM, we had just 1 trade right here, and we got 1 tick profit on that. Right here, we missed a long trade. Looks like we missed another one over here. Now that would have been a momentum trade going into resistance. Missed a few trades in here on this move down, and a long trade right here off the BBC. And that was about it. We ended with plus 1 tick on the YM. Plus 1 lonely little tick on the YM. Okay, on crude oil. Yeah, we had just a few trades here on crude. The first one was over here. We got 7 ticks profit on that. Missed a trade there, missed a trade there. Had a break-even trade there, and then we stopped out there. That put us at minus 1. Okay, we're at plus 7 here, minus 8 here. That got us to minus 1. That's where we ended the day on the crude. There was some nice movement here during the break. The only trade setup I see would have been from right here. Yeah, right over here. Right there. Or, I'm sorry, right there. Coming down here for that move right there. Okay. There would have been a break-even trade right there. But on crude, we ended with minus 1 tick. Soybeans. I am liking trading these soybeans again. It had been a while since I traded them, but I do like trading them again. Now, I had said over here if we got up above 27, we should get right up to 30. We did get right up to 30, then we got up above 30. If we get up above 33, we should get up to 36. Okay. Oh, gosh, I forgot to go look at that. There you go. Interesting. Okay. So on soybeans, we ended with plus 6 ticks. Okay, we had 4 on this one and 2 on this one. That is what we ended with on the soybeans. And on the euro, let's see what we had here on the euro. On the euro, we had 3 trades. We missed this beautiful one right here. I wish we'd have gotten a piece of that, but we missed it. We also missed this one, and this one, and this one. And we finally got a break even over here. Missed this long right here. Had a break even there, and I'm sorry, we had a +1 tick somewhere. Sorry, this was +1 tick. This was a break even, and this was +2 ticks, putting us at +3 on the euro. During the break, it was just messy. There was a bounce off the BBC right here for the long trade, and that was it during the break. Wow, that was fast. Okay, so let's take a look at this again. Here we go. Okay, today we were +3 on the euro, +1 on the YM, -1 on crude, +31 on gold, and +6 on soybeans. So this is 1875. That's 2875. That brings it, I'm sorry, that's not 2875, 2375, and this brings it down to 1375. Add 310, you're at 323.75. Add 75, you're at 398.75 is what we ended up with, 398.75. Okay. Net for the day of final commission is $318.75, and for the year, including today, is $15,922.50. That's the net with the final commission on the year. On the month, we're up 2,146 and a quarter gross over 5 trading days, averaging 429 and a quarter. If you apply any dollar commission to every trade we've taken, you'd have 1554 and a quarter. If you apply a $5 commission, you'd have 1776 and a quarter. Okay, our average gross net profit, our average gross net, there's no such thing. Our average daily gross profit is 429. All right, our average net profit with an $8 commission is 310, with a $5 commission is 355 so far this month. Yes, great things he has done, John. Our yearly total, 22,100, 250. That's over 84 trading days. We're averaging 263 per day. 263 per day. Okay. And now, if you have not taken a free trial, let's see if I can do this right this time, then just go here to this page, apply.cfrn.net. Fill out this little form. When you fill out that little form, you'll be sent all you need to take the free trial. Another way to take the free trial is to go here to CFRN.net, and in the right-hand column where it says register for a free trial, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click the confirmation link. Okay, if you don't click that link, you do not get the free trial. And that, my friends, is that. Let me slide this over, and I will hit stop recording. There. All right. So, that's it. I guess we stopped the recording, and I can head back out to fabulous Phoenix, Arizona. Phoenix, if you are present and accounted for. You are. I don't hear you, but I see you taking the charts.
Yeah, I was reading Bart's post. Was there any unanswered questions?
I do not see any unanswered questions. Nope.
And the video played, so I'm not sure why Bart didn't see it.
When you just didn't show your chart when you opened up the room. You just had the default thing showing because you passed it right over to me. The video did play though, but after the video played, it just showed the default screen. But it's showing your screen.
Right, because I was sending it over to you.
Yep, that's why. He figured it out, I think.
Okay. All right, buddy.
All right.
Recap of the recap was?
Today it took 22 minutes and 2 trades to get the goal for the day.
That's awesome. All right.
Yes. Yes, indeed.
Okay, well, have a good trip.
All right.
You'll be
Thanks.
back Sunday night? Monday
Yeah, I'll be
morning?
back here on Sunday night.
All
Sunday
right.
night.
Okay.
All right.
See you then.
We'll see you.
All right. All right. Think about the person that you dislike the most in your life. Seriously. Think about them just for a moment. I know we're supposed to love everybody, but just pretend. Just pretend there's somebody. President Obama is making a speech. He says that tax reform is unlikely before election, and I think they should forgive all taxes and start from scratch. That's my vote. So we'll see what happens there. Shell companies need to be identified. He's talking it up, and it has to do with the jobs report, I think. But the reason I brought up the person that you like the least, think about this. That person who irritates you, aggravates you, your DNA and their DNA, 99.9% the same. No way. Not that guy. Yeah, that guy. Now think about it. What's in that 1%? 99.9%. Let's see here. One second here. Let me get this all right and ready. Okay. You guys have no idea how much work this is. And I still don't have it right. But I haven't given up either. So, pretty close, but okay. Okay. Oh, moving things around. Checking with Chris to see if he is going to join us today. Chris is our ag specialist over topthird.com. You guys should know who he is by this point. Anyway, the April jobs report, which is I think why the president took this opportunity. Well, he doesn't need much to hold a press conference, but this could be, I suppose, a fair reason. The April jobs report was a disappointment. The U.S. economy added 160,000 jobs in April, the fewest since October of 2015, and well below expectations for job gains of 200,000. And while any and all disappointments relative to the headline number get those who are bearish on the U.S. economy all excited, this is really the kind of jobs report we've been waiting to see. Really? As the U.S. economy pulls closer to full employment, economists have long argued that the pace of payrolls gains will simply have to slow down. In a speech last year, San Francisco Fed President John Williams said that once the U.S. economy is operating at full strength, That's all 8 cylinders, unless you drive one of those rotary things, and then I don't know how you compare that. Once the U.S. economy is operating at full strength, only 60,000 to 100,000 new jobs are likely to be created each month. So, here we are. Williams also anticipated Friday's chorus from the bears, adding, commentators may call this job growth disappointing, and it was when we were climbing out of the hole the recession left. But in a healthy economy, it's what strong, steady growth looks like. After Friday's report, Neil Dutta at Renaissance Macro called this the best jobs report since January, writing employment reports should be taken holistically. In other words, not just based on the numbers. This means combining the growth in jobs, the length of the work week, and hourly earnings. In this regard, the April's jobs number was the strongest since January. The economy is at full employment. At full employment, the growth in payrolls slow and wages rise. We saw both of these in April. Wait a minute. What about all the people who are unemployed who've ran out of unemployment benefits? Once you run out of unemployment benefits, you're no longer counted as being unemployed. You don't factor into the figures. I guarantee you, Donald Trump does become the president, and I don't know. The polls don't look good at this point. Now that can change, because he said he's only yet begun to light into Hillary. So the poll numbers don't look very good at the moment. However, I got to believe Donald's going to do something to change this. Is he going to be that different president? Or is he just going to be the guy who says he's going to be the different president and then becomes the same president? Already, you know how long he bragged about he's funding his own campaign. Now that he's down to the only guy running, guess what? He's chasing donors. He said the problem all along with having all these donors is that they control you. They tell you what to do. Well, I don't know. So the economy's at full employment. So if you know someone who's unemployed, tell them they are confused because the economy is at full employment. It's right here in black and white. It's on the internet. It has to be true. In April, hourly earnings rose 0.3% over those of March and 2.5% compared with those of April 2015. This annual rate of wage gains matches the fastest we've seen since the crisis. Wages rose 2.5% year on year in both January and February. Now, here's a little pictorial of the average hourly earnings growth. Somehow that doesn't look like a picture of strength. But hey, I'm no economist. Of course, also hitting our inbox shortly after the jobs report were calls for another round of quantitative easing from the Federal Reserve before its benchmark interest rate, currently pegged between 0.25 and 0.50, hits 1%. Now, she said clearly, I will not do quantitative easing. She said, I might buy some bonds. Okay, that's just a horse of a different color. According to data from Bloomberg, there are no Fed meetings with as much as a 50% chance of an interest rate hike out to February of 2017. Now that's just their opinion, but it's their opinion. So the markets are taking Friday's report as another sign the Fed isn't going anywhere. And maybe it isn't. But a disappointing headline out of Friday's jobs report is not an indictment of the U.S. economy. Because if the U.S. economy continues to grow slowly but surely, and the labor market remains intact, Friday's report of modest job gains and solid wage growth is something we should all get used to. I don't know. So, sounds a little shaky to me. But you know what? It's on the internet. It's got to be true. All right, Donald Trump has said that he will approach financing the U.S. government as if it's one of his failing casinos. He actually says this stuff. He said on, and obviously, I mean, of the two candidates that we have to pick from at this point, this is a two-horse race now. Well, 2.5, but the half, you know, I don't know. I guess we still have to call it a three-candidate race. But Donald's knocked out, what, 15 other opponents from when this thing started? I mean, the Republican debate stage was so doggone crowded, they had to cut it into two separate debates. You know, the top tier and the bottom tier. Anyway, he said on CNBC yesterday that as president, he would find ways to renegotiate the public debt and pay less than 100 cents on the dollar if the economy went bad. I've borrowed knowing that you can pay back with discounts, he said. I would borrow knowing that if the economy crashed, you could make a deal. How does that make you feel? Here's a guy borrowing money from you, not Donald, but just any guy. Your brother-in-law. He's borrowing money, and you can read his mind, and in his mind he's saying, well, I know that if I get in a jam and I can't pay him back, he'll cut me a break. He'll either let me off the hook, or he'll let me pay him back 50 cents on the dollar, or he can just say, or he'll just say, well, pay me whenever, and he won't, you know, rack up the interest. This is what I guess he's not the presumptive president yet, but he's or the presumptive candidate. I've borrowed knowing that you can pay back with discounts. Man, let me get in that line. I want to go stand in that line. Some corporate finance deals really do work like this. You issue risky debt, and the lenders, you might not be able to pay them back in full if something really bad happens. But that kind of debt bears a high interest rate because the lenders know you might not be able to pay them back in full if something really bad happens. U.S. Treasury bonds have been very low interest rates because investors are extremely confident they will be paid in full even in poor economic conditions. Trump, by openly saying he would keep partial payment on the table as an option, could spark a crisis in the Treasury markets if he becomes president. Investors would cease to see Treasuries as a safe asset and would demand higher interest rates in exchange for the risk. Maybe he's sly like a fox. Now this, of course, is a terrible idea and a good reason for Republicans to hesitate in coalescing around Trump. Do they really want manufactured economic crisis to be part of the Republican brand? Well, judging by their behavior during the 2013 debt ceiling crisis, some of them do. This particular desperate measure floated by Trump is novel, but he is not the first Republican to advance the idea that usual concerns about prudence and risk can be thrown out the window because the country is already a smoldering garbage fire. It has been common for years for some Republicans to talk about America's debt as unpayable. Well, we've talked about it here on the show. We have a hard time keeping up with the interest, much less the principal. Starting from that incorrect premise, Trump is only adding the insight that if you're going to default anyway, you might as well borrow what you can while you still have access to the credit markets. Sly like a fox. But saner Republicans, the ones who knew all along that America faces a debt problem, but not a debt crisis, and that talk of non-payment is irresponsible, should be horrified by what Trump says when he puts on his CFO hat. Okay. America's broke, and this guy's a billionaire. You know what? America may take some strange twists and turns here in the coming months, years. I mean, do you understand that this guy plays a different game? He's going to approach running America like he would approach running one of his businesses, some of which have been very successful and left him personally a millionaire, and others which businesses which were bankrupted, not personal bankruptcy, but corporate bankruptcy, and left many vendors unpaid and destitute. Now you got to take that to the poll with you. I mean, it's certainly a different approach than we've ever seen from any president ever. Ever. It's going to be real interesting to see how this plays out. I'm just not sure. Now, his foreign policy, or Obama's foreign policy guru gave a shockingly blunt interview to the New York Times. Barack Obama's national security advisor, or deputy national security advisor, his Marty Fife, Ben Rhodes, gave a surprisingly blunt and honest interview to the New York Times about how the administration has sought to shape its foreign policy and sell it to the general public. The interview, published yesterday with the headline, "The Aspiring Novelist Who Became Obama's Foreign Policy Guru," received widespread attention for its unusually honest tone and Rhodes' willingness to share details about the meticulous foreign policy narrative he has helped Obama construct. There are some fascinating revelations, many of which revolve around Obama's nuclear deal with Iran. The White House consciously created an echo chamber of experts and commentators to shape the public's perception of the Iran deal. We created an echo chamber. They were saying things that validated what we had given them to say. We had test drives to know who was going to be able to carry our message effectively. So we knew the tactics that worked. Rhodes' story of the Iran deal began in 2013, but it was not the full story. As many foreign policy experts have noted, Obama began negotiating with Iran at least a year before Hassan Rouhani, Iran's new moderate president, defeated Iran's hardliners in a landslide 2013 election. Still, Samuels wrote, the idea that there was a new reality in Iran was politically useful to the Obama administration. The administration is not betting on Iran's moderators being real reformers. I would prefer that it turns out that Rouhani and Foreign Minister Zarif are real reformers who are going to steer this country into the direction that I believe it can go in because their public is educated and in some respects pro-American. I'm sorry, what? Does he not know they burn effigies of him on a regular basis? But he ends, we're not betting on that. I'll take a piece of that action. The former Secretary of Defense Lou Panetta is not sure Obama is still serious about preventing Iran from obtaining a nuclear weapon. Part of Panetta's job in holding up the nuclear deal was to assure Israel that Obama would not allow Iran to develop an atomic weapon. Would I make that same assessment now? Samuels says that Panetta says probably not. Secretary of Defense Leon Panetta. Not sure that Obama will not allow Iran to obtain a nuclear weapon. Now we have a shot clock here. Okay, unless he declares martial law, he becomes a lame duck. He's already a lame duck, but he's been lame since the beginning. But once the November general election hits and we know who our new president's going to be, he pretty much loses all power. And did you know that once the November election takes place, immediately the winner of this horse race begins to receive top secret information, classified information? Well, I mean, they got to get ready for the job, right? They got to get up to speed. Okay. Others provided a glimpse into the administration's perception of political experts and the press. Rhodes hates Washington's foreign policy establishment and doesn't care if they hate him back. He refers to the foreign policy elite, which he said includes Hillary Clinton and Robert Gates, as the blob, and he gives zero expletive about what most people in Washington think. The White House relies on hand-picked Beltway insiders to help the administration spread its message. These apparently include the Atlantic's Jeffrey Goldberg and Al Monitor's Laura Rosen. Rhodes thinks most of the reporters the White House has to deal with literally know nothing. They call us to explain to them what's happening in Moscow and Cairo, Rhodes told Samuels. Most of the outlets are reporting on world events from Washington. The average reporter we talk to is 27 years old, and their only reporting experience consists of being around political campaigns. That's a sea change. They literally know nothing. In his piece, Samuels interviewed multiple administration officials. Most would not give their name, except for Panetta, good for him, and Valerie Jarrett, about what they think has shaped Obama's worldview and, as Samuels put it, the evolution of his ability to get comfortable with tragedy. The answer is summed up best by one anonymous official. Clearly the world has disappointed him. Oh, my heart breaks for you, Barack. The world has disappointed you. We just couldn't bow and kowtow the way you did. One more thing. This is kind of big, square. Now, Jack Dorsey, I'm a little bit of a fanboy when it comes to Jack Dorsey. He was there when Twitter was born. He was there. Oh gosh, what was the other one? He was the founder of Square. And today they're sinking like a stone. As of 10:37 a.m. Eastern, the payment tech firm's stock is down nearly 20% at $10.54 a share. The drop is the worst for the company since it went public on November 19th, 2015. Now, my idea, for what that's worth, is that Mark Zuckerberg was in position to become the next payment processing king in the world. Why? He already has everybody's information. We processed one payment through Square, and when we processed our second payment, the iron gate went down. And we've been doing business with PayPal as a payment processor for, I don't know, 5 years or so. I mean, it hasn't been without our, there's been the occasional aggravation, but so far, we've been able to work things out. And I thought Square was supposed to be simpler, smoother, slicker, cooler, neater. I mean, heck, they got Jack Dorsey, right? So what is going on? Friday's slide comes the day after the company reported disappointing quarterly earnings. Square announced a net loss of $96.7 million for the quarter and a loss of 14 cents a share against expectations of a 9-cent loss. The Jack Dorsey-led company beat on revenue $379 million against expectations of $343 million. Now, if you make $379 million for a quarter, 3 months, that's pretty good, yeah? And so out of this $379 million that you make, how in the world do you trade those magic beans for a cow and lose $96 million? Quarterly results sent the stock tumbling in after-hours trading yesterday, and the losses have continued today. They're down almost 20% today, 251. Now, we really need to get to the bottom of this. We got to figure out, because this could be one smoking hot bargain, because Square is poised to at least be a competitor to PayPal. Now, any of you that have done business with PayPal, they have the most archaic method of doing business. It's like prehistoric and Stone Age. When you want to open an account, now this could have changed. Like I said, it's been a number of years, but I opened an account and then 5 years later opened another account, and both times it was the same. You give them your bank account number, and over the course of a few days, they put like 2 pennies in your account, then they put 3 pennies in your account, and they put 2 pennies, and then they put 1 penny. And so then you got to report back to them on what day how many pennies they put in your account. If it matches up, then they figure you really are who you say you are, and they will open an account for you. I mean, are we still writing on the walls of caves here? I mean, there's got to be a somewhat more sophisticated way. Now, it's possible, I suppose, that they dumbed this thing down from the beginning to create a worldwide payment network. You see, some people don't have bank accounts. In fact, if you go to Africa, 80% of the people there don't have a bank account. You know what they have? They have a cell phone. That's right. And they load credits onto the cell phone. They go to these little roadside shacks. They buy a card. They scratch off the number. Let's say it's a let's say it's the equivalent of 10 US dollars. They scratch the number off the back of the card. They tap those digits into their cell phone. Now, still got to pay for your cell phone, but on top of that, you have $10 to spend. Where can you spend it? Believe it or not, at the next little roadside shack down the road. You want to buy some tomatoes? Negotiate a price. You ask the merchant for their number, and you text 25 cents to that merchant. That merchant looks down at their cell phone. They see that they just received 25% credited to their account, and they put your potatoes or tomatoes or whatever in a bag and say, have a great day. Now, we're still trying to get Apple Pay off the ground and running. They've been doing this in Africa since the first time I went there in 2003. Yeah. I mean, necessity is the mother of invention. Is that how that goes? See, in Africa, many people don't have the proper documents to open a bank account. Birth certificate. I was born, in a mud hut in the middle of the desert. They don't issue birth certificates out there. And if you happen to have been one of the privileged few and were born in a hospital and have a birth certificate, now you have to still have the minimum amount of money required, whatever that is, to actually deposit in the bank and open an account. Okay. And this looks too good to pass. A stingray is a suitcase device that U.S. law enforcement, both state and federal, have used to hunt suspects by tracking their cell phones. A stingray works by mimicking a cell phone tower. Authorities drive around with the device, sending out signals, and all mobile devices in the vicinity are forced to connect to it. This means the police could have access to phone calls, text messages, and other private data. The device is controversial because of the scattershot way that it operates. It often captures data from nearby devices, not just the intended target. Well, that would be a no-no, wouldn't it? But the tool, which was originally created for overseas warfare, is very powerful. And if it is used to prevent terrorism, for example, there is certainly an argument that its use is justified. Don't be texting stuff that you don't want other people to know about. Less easy to defend is the stingray's use in minor incidents of local crime. But it is certainly being used in that manner by law enforcement. An article from Capital News shed light on the extent of its use by local law enforcement in Maryland, and some of the uses are surprising. You're going to love this. One in particular jumps out. Capital News points to one instance in which a pizza shop's employee in Annapolis was robbed of 15 chicken wings and 3 sub sandwiches. Now, no, those are not CIA code words, like we got the package kind of thing. I'm talking about 15 chicken wings, kind you eat at the ball game, right? Or wherever it is you eat them. And 3 submarine sandwiches. That's not code for a Nautilus nuclear sub. It's bread with meat and cheese on it. So a pizza shop employee was on a delivery run. Somebody robbed him of his chicken wings and his 3 sub sandwiches. Now, I gotta say, living in Maryland must be quite expensive, because 15 chicken wings and 3 sub sandwiches had a value of $56.77. The police got a court order to use a stingray, but they didn't end up catching the robber. It's supposed to be used for terrorism, the public defender told Capital News. It's not being used for the purpose for which it's being designed. And Meckler should know stingrays have been used to surveil Baltimore residents more than 4,300 times since 2007, according to a report last year by the Baltimore Sun. Well, well. A stingray is coming to you. Now, they created this whole article about chicken wings and sub sandwiches to slide in a little info about the stingray. Here's the stingray. You see one of those, turn your cell phone off, I guess. Smaller than a suitcase. They fibbed. For 3 days, we've been talking about one topic on our good word for the day: when God calls you. And I do believe today is going to be the last and final day of this installment. Let me check my notes. Nope. Got one more installment tomorrow, Monday. So let's get down with number 3 today. The Lord called Samuel again the 3rd time. 1 Samuel 3:8. Any of you that read your Bible over the course of your life, you've read the story of Samuel. He kept hearing this voice in the middle of the night, and he couldn't figure out who the heck it was. You didn't arrive on this planet with your calling pre-clarified and your gifts pre-developed. You also don't have a toll-free number stamped on your bottom, for help. Got questions, comments? Wouldn't that be novel? Yeah, it's not there, so don't bother looking. I already looked. Discerning God's calling usually involves attempts and failures. He called Samuel 4 times before he recognized the divine voice. Before Peter walked on the water, he said, "Lord, if it is you, command me to come to you on the water." Matthew 14:28. Jesus said, "Come." Here's a lesson you can learn from this. You are not in charge of water walking. Jesus is. It's not about having power at your disposal to be used anytime you choose for whatever you please. You've not been created into a superhero with superpowers. No cape, no tights. Sorry. It's about having power at your disposal to be used when the time is right, when the Holy Spirit is calling you, speaking to you, commanding you. Before you decide to get out of the boat and go for a stroll, you better make sure it's what you've been called to do, and that Jesus is the one calling you. God's looking for more than impulsiveness. Sometimes we make reckless decisions about relationships, finances, or work, and then rationalize them using the veneer of spiritual language. In many self-help books, risk-taking is seen as commendable. But as a Christian, the risks you take should be in direct response to God. If you're a thrill-seeking personality, you may be particularly susceptible in this area. Boredom can make you vulnerable and tempt you to solve problems by making rash decisions that are out of step with God's will. How many times have we done that? We get tired of waiting on God to do something. We get tired of waiting on Him to move. And so we take matters into our own hands. And what do we end up with on our hands? Well, we'll be polite and just call it a mess, okay? We end up with a mess on our hands. There's a fine line between not being afraid and being stupid. And it's a fine line that's easily blurred. Knowing when to step out of the boat and take a risk doesn't just call for courage. It calls for wisdom to ask the right questions, discernment to recognize the Master's voice, and patience to wait until He says, come. That's our good word for the day. Part 3 of when God calls you, will you answer the phone? 1 Samuel 3:8. The Lord calls Samuel again the third time. Remember? He called him once, called him twice. Took 3 times before he figured out who that voice belonged to. And at that time, he answered the call. He picked up the phone. He said, yes, I will. Will you? When your phone rings with your calling on the other end, when the call comes in to deliver your calling, will you answer? Will you listen? Will you obey? I'll leave you hanging with that question. Think about it over the weekend, because your phone may have rang before and you didn't answer it. Or maybe you answered it and, the call just didn't line up with your lifestyle at the moment. I mean, you had a lot of things going on. You're head of the HOA and you sit on this charity and you're a deacon at the church and you got 3 boys and they're all playing baseball and they all play on a different night. You got to be at all the games. I mean, where in the world are you going to find time to do this church stuff? It's not church stuff, it's God stuff. When will you find time to obey the will of God? The very thing that you were created for. Don't you understand that that one thing has far more importance than all the ball games and all the HOAs, all the board meetings, all the positions, all the titles? Because that calling on your life is an eternal calling. Have you thought about that? Next time the phone rings, give it a thought. And that's our good thought, our good word for the day. All right. Let's take a look at some of the alerts from last night and see what these markets did. Now, yesterday we talked about the S&P 500. It was pulling back, and we said, you know what? Maybe it'll pull right back into the zone. And then we said we'll get a leg down. At the time, I drew the leg here. Okay. Well, last night when we got into the partners meeting, we found out that we hadn't got this leg. We had gotten down to this line of support. Take care, John. And so what does price do? Doesn't do that. It repeats itself. So price comes down to this area of support, which has been an area of support all week. I'd love to tell you it was a weekly trading zone, but it's not. So yesterday, as we left the show, we thought price might work its way back up to the zone, find support, and then put in a leg that would take us down to 32.33. But the market had other ideas. I mean, it ultimately did what we thought it was going to do. We could have sold the market at this point when we were talking about it, or we could have sold it at this point, or we could have sold it at this point and put our stop right above the zone. Okay. Obviously, the closer you place your order, your sell order to the zone, the less risk you're going to have on the trade. Okay. And so price comes back as we thought. Zones are an area, so it didn't quite get there. But it did put in the leg back down, but it didn't put a leg all the way down. It put a leg here. And then it found good support, and it put another leg up. And then it found good resistance at the same spot. This 46.47, much like the 60.61's been like a magnet. So we come through the zone, hot knife through butter, right? Yeah, there's a little consolidation above it, but this particular candle just kind of slammed through it. And so from support to the zone, back down to support, back up to the zone, back down to the support. Now this time, it gets a little tricky. See where it lines up with these highs over here? Okay. The zone is at 46, and we get up to a swing high of 45.25. So we're 3 ticks off. If there were ever such a thing as tricky behavior, I suppose that would qualify for it. Okay. And so early over here, we surmised that we might see this and see this. Instead, we saw this. So price goes up, finally makes it. Now remember, we miss it by 3 ticks, but it overshoots the zone by 32. It gets down to a low of 30.50. 30.50. So that's 5 ticks. Yeah. Go from 32 down to 30.50. From 32 down to 30.50. Yeah, that's 1.5. It's 5 ticks. Okay. So we're shorted 3 ticks. 3 ticks shy here. We overshoot 5 here. Okay. Then what does price do? In 30 minutes, it runs right back up to the zone. And this initial down energy comes off the jobs report. And then everyone has 30 minutes to absorb the jobs report. And they realize that headline, oh, that's the jobs report we've been waiting for. Up we go. A little more time to think about it. Back down we go. And now where are we? Back up again. Now this zone-to-zone move from 33 to 46, that's 13 points from zone to zone. 13 and 13 is 26, and throw in another 13, and you're at about 39 points, just zone to zone to zone. Okay? Now, early in the week, once we broke through this zone, if you sold this zone believing that price had the ability to make it to this zone, you know, if you're a chart watcher, you had some nail-biting moments, especially here, especially if your stop was right there. But the zone held it, and it sent it back down. And if you only caught the down move, that was 20, we'll call it 46 down to 44. That's a 12-point move. Is it worth waiting a couple days for a 12-point move in the S&P? If you're a 10 contract trader, yeah, because that's $6,000. And what do we expect to happen here? The only thing we can expect to happen here until proven different is that this is going to be resistance. And when price gets back down here, the only thing we can expect it to be is good support until it isn't. Now, here, this was a full-blown red candle sticking out below the zone. If you took action on that and got short because you had a red candle below the zone, you got zonked. Wait for the candle to close. If you're in a 30-minute time frame, wait for the candle to close. Because the candle, even though it stuck its nose out, it pulled it back in the final few minutes of the 13-minute candle and ran right back up to the comfort zone, only to turn around. And this time, because see how fast this moved? This was a 1-hour move that took us from 33 to 46. That's 13 points. And so these guys are not going to miss that. There's some people that missed, some people got it, some people missed it, some people got in trouble for missing it. Nobody's going to miss it a second time. And so what do? They come in early, okay? And so you watch for that on your 4-tick range. You watch to see when those buyers are coming in. This touched down at 8:30, or this candle opened at 8:30 when the news broke. And the race to the upside began at 9 a.m. So let's go look on a 4-tick range at 9 a.m. Here's 8:58. No. Arrow. 9 o'clock. Okay. So at 9 o'clock, we get a bullish cross. Price pulls away. Price pulls back to physically touch. Up close. We've got an open here at 2034.75, so we're going to round that up to 2035, and we put in a swing high at 2038. So that's a 3-point run. Okay. Now, from 33 to 46, that's a 13-point run. Okay. But that ran over 2 hours. That ran from 9. Then here's the 9:30 candle. So let's mark off from 9 to 10. What happened during the 9 to 10 time frame? Let's see if we can just squish it up a little bit. Oh, so close. Come on. Nine o'clock, that's where we got the first bullish cross, right? And then we put in the swing high at 46. Okay, now why 46? Because 46 was the zone right here. That's why we stopped at 46. We didn't get a bearish cross, get a bullish cross, but we have, it was this area here. Bullish cross, price pulls away, price pulls back, up, close, back, same thing, back, and then this run. Okay. At the start of it all, your bullish divergence was perfect. And start to slip slide a little here, but it never crossed below the 50. It stayed above. Green lines are down here, red and blue lines up here. That's bullish divergence. And so from 31 to 46, no, from, call it 33 to 49. Except your entry didn't come in until here. Any questions on that? Okay, I don't know how to make that any clearer. It's the 4-tick range operating inside of the weekly trading zones. Okay, it's what we would have seen happening earlier in the week, you know, here and here. This was the Sunday night Globex Open, the zone, the zone, the zone, the zone. This was a little tougher one. Leg, retrace, leg, retrace. On this move here, you know, once this lows out, once you take out this low and say this candle opens, okay, odds are you're going to try to hit the zone below. And even if you wait till the price takes out this low, I mean, you're really starting to cut things thin here. But you're down to 2053. which takes you down to 2048. That's a 5-point move. That's half a week's work at 2 points a day. Okay? Just want you to understand how to work those multiple time frames off of each other and to take advantage of what's happening here as price attempts to move from zone to zone to zone to zone, because that's what price will do. Price will try its best to go from zone to zone to zone. Now, if we wheel it over far enough, we can see the reverse side of that on the 30-minute chart. The reverse side of that went from 10 o'clock to 11 o'clock. So let's go see 10, 11. So here's 10. To 11. Okay. Now, we know we're coming up against a weekly trading zone. So even though we have, like a bullish cross here and a pullback and an up close, we don't want to go long into what we know is a weekly trading zone. And the weekly trading zone is 46. $46, $47. So this is how we use our multiple time frames working together. We know that the larger time frame, we've got 46, 47 overhead. We've got 32, 33 below. I could get an award for hitting the wrong button the most times today. I don't know if anybody's keeping count, but it's been a lot. Hopefully you're not keeping count. All right. Oh, I almost did it again. 32, 33. Get on up. 33. Okay. And 32. Okay. Now we didn't quite get to the zone. Zones are an area. It happens. Okay. Now, here we came, it looks like a tick shy. But as price comes up and rolls off, we got to wait for what? We got to wait for a bearish cross. Bearish cross, price pulls away, price pulls back, down, close. And there we go. We get a deeper retracement. Okay. Now, right here, this is where often we'll make a mistake. Let's blow this up and figure out why. Bullish cross, and so we think we're supposed to go long. But we don't have a pull away here. Price does not pull away. It's got to pull away. There's got to be at least one tick of white space in there. Then it pulls back. Then it gives us an up close. Then we buy the open of the next candle. We don't have any of that present. Okay. All right. And then that takes us down to the low at 33. Okay. All right. Now we're back up to almost 45.25. Okay, so what's going to happen here? Let's go look there. When we hit 45, if we hit 45.25, we just hit what? It's actually 46.47. We've already been there today. Okay. So we want to see price. See, we don't want to go long. We wouldn't want to be long. Now back here, if you had a pullback and an opportunity to be long, that would be great because this acts almost like a target, like a magnet. It pulls price into it. Okay. Follow me? Okay. What we want to see it do now is it may hit the zone, it may not. Look at where these are. Okay. If the green line comes up and they turn down together, that could set us up for a short trade. So we'll come back in a minute and see what happened. We're going to put a little arrow right under this candle. So we'll know that when we come back, that's the last candle we had looked at on the 4-tick range, knowing that we've got a weekly trading zone overhead, a weekly zone below, and that already today from this is the one we were looking at, from 10 o'clock down, and then we looked at the one back up. I didn't color that one in, I guess. So the ideal scenario is this. Does the market have other ideas? It'll tell us if it does. How will it tell us? Well, we already have a bullish cross, but we'll get into the zone, might spend a couple candles in the zone, close above the zone, start to move higher. We look for a long position, which takes us up to our next weekly trading zone, which is 2060, which is 13 points away. Now, what's happening here? Price is pulling back either to give us one more leg up. Now, you see, when we get an up close here, the low of this candle is 33.75. So at 44.75, we don't have 2 points of room to run to the zone. So we don't want to take that long trade because we have to expect this to be good resistance until proven otherwise. And so what we may see right here is a bearish cross. Once we get a bearish cross, now we're looking to take short trades back down to this zone. So we've got a nice wide zone to work with. We're sitting at 44 right now, roughly, 43. And this is down at 33, so there's 10 points. Room to run to the downside. So we'll just have to see what happens. Now remember, this is where I put that arrow just a moment ago. In order for this to become a trade, we got to have a bearish cross, price pull away, price pull back, down close, and our divergence needs to change as well. And it's not doing that as of yet. But as price pulls away, that's when we'll see a divergence start to change. So let's run through a couple more, or let's go back to this one for a minute. Open it up. Last night the alerts went out at, tell me, 8:30 p.m. A little early last night because we had the partners meeting. And that's going to be 2030. Okay. And so we were looking to buy 20.50 and a quarter. That didn't happen. Sell 40.75. Okay. 40.75. Looks like we had a couple opportunities to do that. $20.40.75. Okay, swing low here. It's $37.75. So if we're selling 20.40.75, 20.40.75. We put in a swing low, 37.75. That's 3 points. We need 2 points per day if we're trading the 2420 blueprint. 2420 blueprint's very simple. You make $100 per contract per day. Once you do that 10 days in sim, you then go live with one contract. You increase your account balance by $2,000. Once you increase your account balance by $2,000, you add a second contract. Now you're at $200 a day. They'll get rich quick, but $200 a day is $1,000 a week gross before your commissions, and you're new on the job. Okay? Now, after 5 weeks, you're going to go to 3 contracts, and another 5, you're going to go to 4. At this point, you're now grossing $2,000 a week. Again, that's not a get rich quick, but the goal of the blueprint is to take you all the way to 20 contracts. So I'm trying to give you off just a bite-sized piece here, something that's more in reach. You know, God, I don't know if I can go 24 months, man, I don't know. 20 contracts seems like a lot. Well, how do you eat an elephant? One bite at a time. I think it goes something like that. And so you are taking it in bite-sized pieces. The important thing is that with our methodology, you are underwriting every new contract with profits you earned in the market. No profit, no new contract. Okay? Unfortunately, it's criminal. So many groups will give you a little bit of training, give you a couple indicators, throw you out there, wish you the best. And a guy who's got $5,000, you know, goes in and just starts trading 5 S&P 500 contracts. Why? Because he can afford to. Does he know how to? No. Is he prepared psychologically, emotionally, even from a strategy standpoint? Probably not, because he hasn't proven himself in sim yet. And so we take the time to go through all of that step by step by step by step. Give you unlimited mentoring sessions, as many as you need, as long as you're an active partner, because we want to see you succeed. We want you to be another success story, okay? Trading's not easy. Never has been, never will be. The day it becomes easy, it's all over, okay? But it can be simple. That's the key, learning to make it simple. And that's what our 90-day training program, our 90-day mentoring program is all about, is simply teaching you how to use the odds in your favor. How to put the odds in your favor. Time after time after time. Now, does that mean that you're going to use Vegas talk, win every hand? And I hate the Vegas talk, but everybody always seems to want to use it for their analogies when it comes to trading. The answer is no. Now, individual probability. This is all about trading in probabilities. Okay? So, what I'm going to say next might not be music to your ears. It's not what you really want to hear. You want to hear the exact opposite of what I'm going to tell you. However, I'm sharing with you a great truth about trading. If you can accept this principle, your chance for success will be off the charts. If you're unable to accept what I'm about to tell you, then, you know, I was going to say hang up the mouse and go home, but let me just instead, in Christian love, say best wishes, okay? Probability trading, and that's what this is. And anyone who tries to tell you that it's any more than that, well, you better start looking at their motives. Because no one knows if the next tick is going to be up or down. There has yet to be an indicator, an oscillator, a crystal ball, anything that can tell you consistently if the next tick is going to be up or down. Individual trades are not predictable. What? They're not? You can't predict an individual trade?
Hey, can you hear me? Hello?
Hey, is that you, Chris?
Yes, sir. How are you?
Hey, welcome to the show, guys. This is Chris from Third Top. I get it right this time?
Top third top.
Top third.
You just look me up. Just look up Chris Robinson. You'll find me.
I'm gonna have to put a tattoo on me, man. Let me bring up a window and let me show people who in the heck we're talking to here. I'm so glad you could make it today. You had told me to be here every Friday, and I just realized, oh man, it's Friday. All right, so what do you want me to show, folks? Do you want me to show them your blog? Is that the best thing to show?
You can show them top third. You can show them my blog, whatever. It's all good.
Is it? Okay.
Mm-hmm.
Because there's so many dead government compliance rules out there that have.
No, it's I'm compliant, so no worries.
Oh, I know you're compliant, but the thing.
That's me right there. Third from the right, the blue shirt.
Oh, from the right. Right there, that's you?
That's me.
Dude, you sound like a teenager.
Yeah, well.
How old's that picture? Seriously.
That was last summer, I think.
Really? Check this out, guys. I clicked on his picture, and inadvertently, Top Third Ag Marketing, free trial. They got website services, opening and closing audio commentary, Mark's Nightly Green marketing email, Mark's new special grain report. All website services are available to top third clients free of charge. Check them out, okay? Go see what their service is all about. It says free trial right there. Now, give me your blog address, please.
It's the Robinson Review. That's me.
Robinson.
That's it.
Review.
You saw it was there for a second. Then .com.
There you go.
There you go.
Bingo.
It might be the. You might have missed the the.
Did I
Yeah,
miss
you have to
the?
starts with THE. Yeah, that's all right.
All right. The.
All right.
Did Bert patch you in? Is that how you got in?
Yeah. Mm-hmm.
Okay. Thanks, Bert. You're a sweetheart. Okay, the Robinson Review. What are people going to find at the Robinson Review? 18-month high peak tired. Okay. I mean, this last contract has been so incredibly active. I mean, I don't know. Are you able to see my screens? Or
Yeah, I can see.
you can see my screens? Okay. Let me go to my bean chart real quick.
Yeah, the July beans, we know we had a $1.95 rally off the lows, and that was a great rally, fueled by the money flow. It wasn't really anything other than the funds deciding they wanted to own commodities, and you've had a huge amount of speculation coming out of China in commodities and physical, everything from rebar to PVC to grain.
Yeah. Now,
you know, there's a huge interest in there, so it pushed our grain up quite a bit. We're on the precipice of another government report on Tuesday, so we could get some follow through, we could get some correction, but it's going to be an information dump on Tuesday, which is going to give you opportunity because typically they produce. Well, the last time we had a report was on March 2nd, and it was a very bearish report, and we did nothing but rally, so we put the lows in and took off from there. So that's why those, especially with grains, when the USDA releases information, it can really give you a lot of opportunity. So we're getting on one of those Tuesday at 11 a.m. Central Time.
Is that the WASD?
Yes, worldwide supply and demand.
Okay.
And what people are going to be watching there is really what led us up with soybeans. Mm-hmm. There's some concern that the Argentinian they lost around anywhere between 5 and 15 million metric tons of soybean production. That was enough. That was the bullish story that really kept us going for a while. They had a little too much rain down there. So we'll get the hard data on really what's going on down there with that, if there was that much damage to their crop. The interesting thing is, though, even if they did have that kind of damage, there's still plenty of soybeans out there. This, to me, after doing this for 30 years, this looks like it was more of a groundswell up just from money flow. You saw a huge move in the commodities when the S&P and the Dow had all that volatility at the beginning of the year where we were down 15%, then up 15%. You saw a lot of movement coming into commodities, and you saw the move in gold. Gold was up 25% off its lows. It went down $1,000 and rallied. And also you saw the rebound in crude oil. Crude oil, basically gained 50% from 26 to 46. So that pulled up commodities. And this was after we had a large amount of people kind of turn their back on commodities. And 2015 was, really deflation. So the sort of the feeling may be that we may be looking at trying to, reinflate these markets. And you've seen a lot of that action coming out of China. In fact, their market's overheating so much that today that they're discussing they're going to release some of their stockpiles. The price for pork over there has gotten so high, they're trying to calm things down. So at the end of the day, it's a big ball of wax. The other thing I would watch is the action that has we've had in the U.S. dollar. We had a huge rally in the U.S. dollar, which peaked out. We weren't able to get above that par level. We had a correction. We were down at about 8-month lows in the U.S. dollar. That was also friendly, in other words, supportive for our commodity prices. So it gives you a lot of you can sort of fall into analysis paralysis, but at the end of the day, that's why we like to focus on these USDA reports, because it kind of brings everything to a head, and the price discovery being what it is, you know, every bull and every bear is going to have a chance to sit there and click their trading screen, and we'll get some price discovery. Now, that's really sort of laying
What's
the field
the
for what we're
symbol
looking
for the
at.
U.S. dollar? I thought it was DX.
DXY, I think.
No, in my system there's no Y, but there's DX.
On mine, try DXM 16. That's the top step. June DXM
DXM.
16.
That would be 6 for us.
Or it might be DY as well. But
No.
it's the
somebody in the chat room, give me the DT Pro symbol for the dollar.
try the @ sign then DX.
No.
All right.
Man, we used to have the dollar chart up here all the time. All right. Well, we'll do it. We'll go an opposite way. If the dollar's up.
The dollar's up actually a little bit. Well, it's basically unchanged on the day. But I'm going to pull up a chart here on my side. We peaked out back around Christmas, December 2nd. We got to par 62, and since then, you know, we drifted lower, kind of in a stair-step fashion. The low of the move was just 3 days ago. We got below 92, so you know from par to 92. That's an 8% pullback. It was also an 8-month low, and we've had a little bounce since then from 92 to almost 94. So I think a lot of people are looking at the dollar index. If it gets up to 95 there's some resistance at 95. And again, this all flows through too, because a stronger dollar makes our exports for our grain commodities, all commodities, a stronger dollar makes it less attractive. And that's one reason we did have such a good rally, is because the U.S. dollar was selling off, and so it's just one of those things you look at. You know, nothing works all the time, but in general, the nice thing about the currencies is when they have moves, you know, it's not going to switch on you like watching a jet ski on the ocean. It's more like watching a carrier task force group turn. It takes a while to turn, and then once they turn, they keep going.
That's an analogy that I use an awful lot. Is that like the S&P 500? If it's going to change course, it doesn't happen in an instant. I was in the Navy, and I was part of a carrier task force group, and I was on a fast frigate, and we could turn fairly quickly, but that aircraft carrier, to turn that thing around and head it in the other direction, you need a wide berth.
Yeah. So at the end of the day, we've had, if you look at beans particularly, beans really let us up. If you look at a chart of
Frederick said
July
it's
beans.
XMM6. All right, Frederick. I don't know why my chart is refusing to give me. It just won't do it. Bert, if you're in the background, fix my charts, please, sir, if you can. I knew it was DX, Frederick, and see, as soon as I type in DX, it's supposed to just auto-populate, and it doesn't. So, all right, I won't worry about it anymore.
Well, if you want to pull up a chart of the beans too, as in in July, that's the front month.
Okay,
there you go.
On Wednesday night, we told our clients, on the email that we send out an email every night, and on Wednesday night, we told our clients on soybeans we wanted to be buyers at 10:39 and sellers at 10:30. And so this market's been volatile enough. We had 8 cents to the upside. That's like 8 points in the S&P 500. We had 17.5 points to the downside. Last night we told them to be buyers at 10:13, and right here where this vertical line is, that's when the email went out. So price was trading around. It was right at the open, and so we opened for trading at 20. We opened for trading at 10:12. We sold off to 10:09, and so when I sent out the email, the report that goes out every night, it went out right here, and then price rallied, and I mean I can stretch this all the way over because we triggered long 10:13 way over here, 10:13, and we've put in a high today of 33.75. Now that's 23 cents. That was just
it's $50 a penny.
Yeah, at
$50 every contract's $50.
That's that's $1,000 per contract day right there in front of you.
Yeah, the beans, if you get it right, and again, the key to surviving in it is you got to cut your losses, because when you get it right, it runs, or it'll run for you. And out of all the grains, the beans are the really, I think, if you're looking for volatility and
why was last month so quiet in beans?
Last month?
Our last contract.
Pull up a monthly chart.
No, I'm sorry, last contract. The previous contract before we rolled into July.
May?
Yeah.
Well, May, because nobody wants to trade the delivery month because you can get stuck. It's a deliverable month. You don't want to really take.
So I mean, historically, we can write that on the tablet of our heart that we don't want to be trading May.
No.
Okay.
Once you're past first notice date, do not be trading that top step because you don't want to catch people. I mean, literally, you can. You get all involved in that you're not going to actually have it delivered to your house, but you're going to have to, go through receipts and shipments and all that stuff. So it's pretty easy to avoid that. You just don't want to be trading. You get a first notice day, so it's on the calendar, and that's the only one thing you don't want to be dealing with. And honestly, you get some very volatile and haywire moves in delivery months. I know back, it must have been 10 or 15 years ago, I was trading wheat, and on the last day of delivery, I think there was nothing in their offer. The guy had to buy like a couple hundred contracts, and we rallied $2 or $3, if memory serves me straight. They had a big investigation about it because the guys that sold it immediately were able to go out and deliver against it, and it's just one of those things that happens every so often. You don't want to be on the wrong side of a market in delivery. So I would tell everybody listening out there, there's plenty of opportunity in other months. You don't need to be messing around with any month that's in delivery when you're trading commodities. That goes for cattle. That goes for everything. Just in general, stay away. And all the volume moves into the next month too. You're looking for liquidity. You don't want to be in a market that the liquidity is drying up. You want to be where you can get in and out. So
when do we go into May, July? When do we go to November beans?
Oh, not for a while. We'll be trading July. We'll have July, August. It's based on volume. We won't. November is new crop soybeans. So those beans. I think we're about 5% planted soybeans now. That really gets volatile in around August. And August will switch into where November becomes top step. However, there are active spreads where people will bull spread, they'll buy July, sell Nov, or buy Sep, sell Nov, or you can bear spread it, bull spread it. There's a lot of ways to try and trade the difference between the, because really what you've got is you've got the front month, July. That's really representing all the beans that are out there right now that are they're in storage or somebody owns them. They're physically there. They're not in the ground. And then you start, the further out you go, you're trading the new crop. That's what I call it. November is typically new crop for soybeans. December is new crop for corn. And if you're ever trading wheat, usually July or September is is considered the new crop. So just a little heads up if you've never traded grains before.
Because I tell you what, every year we have we just have a heyday with November beans, and we call them the kindest beans of all, because it's like every day, knock on wood, we make money with November beans.
Well, that's a great thing if you can do that. If you're
I don't know why.
doing something right then.
I don't know why, something about our methodology, but boy, when November rolls around, it's good times. And last month, I got so frustrated, I was about ready to take beans down off my main screen for the show. I said, I left them up there because we just weren't getting any movement. There was no volatility. But, I mean, 2 days in a row, we have an 8-cent move to the upside. Then we have a 17.5-cent move to the downside. And then today we get a 20-cent move to the upside. I mean, that's just...
Oh, yeah. I mean, you get some tremendous moves. And lots of opportunity. Now, if you're, like I said, I came out here in 1990. I saw a lot of guys come and go that the worst thing you can do trading soybeans, because they do move on you, is if you average losers. If you got, like right now we're trading at 10.16. I'm looking at November beans. You wouldn't want to buy it at 10.16 and then buy it all the way down to 9.97 and then sell it all at 9.75. I've seen guys do that. They buy it. They can't be long anymore. Then they get out. In these markets, you really have to have good risk reward. You have to. I like the fact that you guys have limit orders when you get in, targets. But the key is, I can't stress it enough, you've got to cut your losses. And if you do that, when you're right, the moves are so good. Like I said, you can make 10 cents in a blink of an eye. That's $500.
A 30-minute chart. So what we actually trade off of is this chart right here. And let me change it over to soybeans real quick. Spell soybeans right. ZSN.
Yeah, I mean, I look at the 5-minute, the 15-minute.
This is a range. This is a range chart, so every candle is exactly 4 ticks tall.
Mm-hmm.
And that's what we use to, like, if we back up a little bit earlier in the day, when we have a bullish cross, such as this, price pulls away, price pulls back, up close, our strategy says we buy the open of this candle, and that candle opened at, opened at 10.19, and we're looking to take 2 points, $100 per contract per day out of the market. And so we got a swing high here of 22.75. So from we exceeded our 2-point target, and then it just
and actually, you know what? One thing, I don't know if your listeners are aware of it. They have mid-am beans, which is it's 1/5 the size of a contract. So if you're not well capitalized, it's not $50 a penny; it's $10 a penny. So and it moves right in sync. It moves.
Every time we look at one of those micro contracts, it seems like there's no participation, and the spread's huge. Is that true? Or?
Right. Well, it depends. I mean,
give me a symbol. At
the end of the, I know what I don't even know what the symbol is for the minis anymore. But it is out there. It's a miniature. And generally if you're trading it electronically, it stays pretty much in sync with whatever's going on the board, because there are guys there that if it gets out of whack, they'll arb it. So it's something to look into. There's no guarantee. And like I said, if you really dig into it and you realize that the liquidity is not there, but for some people that don't, or if you've got somebody that's trying to put a trade on and you want to say, all right, I want to be long beans for the next month, and I'm going to risk 15 cents, and I'm going to try and make 50 or 60 or 70, then that allows you to, again, the key is money management. And if you can decrease your bet size, then when you're wrong, you're losing less money. That's the key, So just something to look at.
Yeah, here's
I think it's just
grains right here. Grains. Let's go down to soybeans. Mini
there it is.
soybeans.
Mini corn, mini beans. There you go.
XB.
Mini beans.
Yeah, I mean, look at that intraday margin, $220. You know, we would love to trade that thing. Now let's see, XB. So let's go out. It's going to be the same month in.
Well, I always say that, just because I say, look into it, it's got to fit for you. You've got to do your homework.
XB, F7, H7, K7, N7. Is that what I would want?
Yeah, July. Yep.
Okay. All right. So.
See, no, there's not a lot of trade there. That's why there's no bars there. So there you go.
Okay.
There we go.
And when you see that, you know that the volume is pretty light. Let's get a volume on here, because we would love to be able to trade a lot of these markets that, when they created the mini S&P 500, the world fell in love with it. I mean, they couldn't get enough of it, and so it surprises me that as they come out with these different contracts that make markets more accessible to someone just getting into trading, someone just getting started.
Yeah, see, there's not a whole lot bidder ask there.
Yeah, I've got an aggregate of 3 contracts on the bid and 5 on the ask. So
there you go. Well, then they don't want to be there. Then
how do we get people? How do we get people in? Well, that's XBN7. I should be XBN6.
Yeah.
All right. Let's start over here. XBN6.
There you go.
Now that might give us a little better picture. Come on. XBN6. Now that's a little more like it. Okay. Now let's open up. Okay. All right. Yeah, we got 30.
So there's some stuff there.
There's 30 on the bid. 30 on the ask. Yeah, that just might be. Let me make a note. XBN.
And there's mini corn. There's mini wheat.
Do you actually yourself trade in any of that, or do you have clients?
No, I did. Years ago when I worked for a commercial grain firm, and then when I started trading for myself, for the first year, that's where but this was a long time ago, before electronic trading. There was a Mid-American Commodity Exchange. It was owned by the Board of Trade.
I remember.
But the beautiful thing was, the beautiful thing was, you could trade everything. They had currencies, they had gold, silver, they had livestock, but the real reason for trading it was they had the 30-year. At the time, that was the really lot of volume there, and this was before they had the post-close trading. At 2 o'clock, everybody would come into the mid-am. So from 2 o'clock to about 2:45, it actually was like being, being in the primary pit, because anybody that had a position on they needed to get out of, they would walk out of that pit, walk into the mid-am. So for 45 minutes, it was basically the primary pit.
Now, when you say 30 years, you're talking about bonds?
Yeah, bonds. Yeah. So, and also too, during the day, it was 5 to 1. But if you built up a position of 5 or 10 or 15 or 20 contracts, you could. They had, if you're trading grains, there was a changer phone. So there were times during the day when the market was out of whack. Again, this is 28 years ago.
Yeah.
This is before people weren't even using cell phones. We actually had a physical phone where I'd call from the mid-am room into the big room, and if you could take a half cent on a 20 lot, you do that 10 times a day, it's a lot of money. So it was a little mini ARB, and but that pretty much all went by the wayside. It's just something, like I said, for anybody that's not well capitalized or wants to maybe day trade and not scalp in and scalp out of the market. The mid-am might work for you, but you've got to look into it yourself, and like everything else, it's caveat emptor, buyer beware.
Sure.
But it is there. It is a actively traded. The liquidity is going to be your best in the primary market, which is electronic. And for most guys out there, you might be better off just trading one lot on the screen rather than you know, in the big pit rather than trading the mid-am. But it's just something, again, it's always good to know what's available in case you're looking for you know, a different type of trade.
Speaking of bonds, last night our number heading into those economic reports this morning was to buy 165.24 on the 30-year, and we actually got up to 166.16. So that was a pretty good move. It didn't stay up there long, so you had to be trailing a tight stop. These are 30-minute candles.
No, 166.16 was a high. The lows, actually, we're making our lows now.
Yeah,
so
the
we're
lows
almost
are now.
we're a handle and a half off the top, you know. Same thing with the 10-year. The 10-year moved up, and at the end of the day, you know, with the unemployment numbers that we got.
And what do you think about that
really
report? You know, they say, I read a headline to the audience, the jobs report we've been waiting for, because this shows slow, steady growth.
Yeah, they were expecting 220. We got 160. It's the lowest growth we've had in 7 months. The thing that people were looking at, they're always trying to outguess what the Fed's going to do. You know, if you started seeing really good job growth, or 250, 300, you know, real strength in the job market, and if they were looking for that, and they were also looking for if we had a continued rebound in commodities, because what they're looking for is about a 2% rate of inflation. Those are the two things that they're counting on in order to raise rates again. They don't want to raise rates when the market's not that healthy. So if you look at the unemployment data we got, and we get it, it's the first Friday of every month. So we just got it now. We'll get another one the first Friday of June. Every 30 days we get fresh data. And right now, based on what we have going on, it's really diminished the chances, it's diminished the possible odds that the Fed's going to raise rates. So everybody readjusts their rates quarterly. That's why you see that
February 17 now before we get an increase.
Right. Well, then what it's really telling you is we're probably not going to see anything until the election's over out of the Fed. You know, the last time they raised rates in December, you know, it really took the starch out of the market. And here's the other thing: when they raise rates, there's a knee-jerk reaction where the U.S. dollar rallies. So if they want to keep the dollar low to prop up our commodities and to try and get a little inflation on the commodities, then it behooves them to not raise rates. So it's a you know, you could talk for hours and hours and days about what the Fed's going to do and whether or not they're going to raise or whether they should raise or won't raise. But right now the market's telling you, based on the information we got today, that it's pretty unlikely that we're going to get any sort of a raise anytime soon. You have the rest of the world in negative interest rates, and you know, right now we have the most attractive interest rates, and you know, really in the rest of the civilized world. And I think that's going to continue to go. You talk about trends and battleships turning and stuff like that. That's a long-term trend. And in my opinion, for what it's worth, it doesn't look like they're going to raise rates. I can't really see them doing anything till we're through that election, really. So now, if something was to really change, and you saw an acceleration, or all of a sudden, you know, the employment, you know, there was a lot of hiring and there's a lot of growth. And the other thing too is our growth is real low for the first 3 quarters. For the first quarter of the year, it's like 0.5%. You know, the Fed's target growth is around 2.5%. So, you know, it's kind of almost like back in Jimmy Carter days. It's looking like like a stagnant economy, and at least right now we don't have high inflation. So, but again, what are the sensitive markets to the Fed? Well, the stock market and the bond market. And you see the bond market spoke here today, and you saw a lot of people try to get in front and try once again to sell the stock market. The stock market has killed more bears in the past 2 years than Davy Crockett. You know, it's just every time they step into it, they get their hand chopped off. And right now, if you look at the stock indexes, they're, you know, the S&P is within what 50 handles of the that 2100 level, and I think that's what a lot of people are looking at moving forward. Can the S&P take out 2100? If it does, I think people are going to be reevaluating
Now, guys, this is the candle we were just talking about when we looked at this chart a few minutes ago. If this 30-minute candle, we were talking about the potential for this zone-to-zone move because we've had nothing but zone-to-zone moves all week.
Yep.
And now that we've closed, I said if we close above this, then you want to be long the open of that next candle. And I think 2060-61 is going to be resistance overhead, at least temporary, just as it was here and just as it was here earlier in the week.
Yeah, I mean,
and it's
just a month ago.
Open Sunday night on Globex.
Yeah, I mean, just look 3 weeks ago, okay? A high of a move, April 20th, 5 days after tax day. 2 times we traded right above 2100. We got the we got the 2098 here, 2105 and 2104. You know, if we settle above those, and I'm talking about not just trading up there and then backing off, but I think if we settle above 2100 for 2 or 3 days in a row, that opens up a whole new push, because everybody that's been sitting and waiting and hemming and hawing and out of the market, they're going to be like, oh, well, we got to get in. It's the only game in town. So once that happens, when you get the last bear, the person that's been talking about the S&P, you know, going to back to 600, something crazy like that, when that guy gets long, that'll be the top. And I just don't think we're there yet. So, but I've watched that 2100 level. I guarantee you, if we get up there, they're gonna try and make a run for it because they'll want to see what's on the other side. You know, it's just human nature.
Yeah. Yeah. Our hardest zone for the week is what do we got for our hardest zone? We're up at we got 2088.89 and then 2123/24. So do we have 2 people running for president, or is Hillary just going to win? What do you think?
Oh, yeah, we got 9. What is this? This is May, right? May, June, July, August, September, October. We have 6 months of nonsense coming our way. I don't know what's going to happen.
Do you think we actually have a 2-horse race? I mean, the polls have got Trump. I mean, yeah, he took the Republican nomination, or in theory will get the Republican nomination, but the polls are just trashing him. Now, I don't know.
Well, it depends on who he picks for his running mate. If he, the smartest thing he could do would he pick, there's a Republican woman senator, I believe, or a woman governor. I can't remember exactly what it is. It slips my mind right now, but I think she's a Hispanic woman. I mean, if he did something like that, if he tried to balance out his ticket with that, then I think he gets him a race. So it's going to be interesting to see what he does as far as picking a running mate.
Paul Ryan would be a good running mate, but Paul Ryan says I can't support Trump right now.
Yeah, no, he's an outsider, and he alienated all the powers that be, the Bushes, the Romneys, I was reading an article this morning about all the lobbyists from the establishment that they don't know what to do because they've lost control of it, for better or for worse. And I think it's going to be an interesting 6 months. I think you're going to see a lot of volatility, but I think the deal breaker is going to be who he picks for his running mate. Because he has to balance out his negatives if he wants to appeal to the rest of the country. So it's going to be, I've lived through a lot of these elections. I'm turning 50 tomorrow, so I can remember the first one that I watched was Reagan. Was it Reagan? Or was Jimmy Carter? I think I was in 5th grade. So I watched the Jimmy Carter deal. I watched the Ronald Reagan deal. Every year, you never know what's going to happen here in the next 6 months. So I think that's really what you got to look at. And I think you're going to see a lot of volatility as we get closer to the election. If it looks like the Republican's going to win, it's probably going to be friendly for the stock market. If it looks like the Democrat may win, you may see a little bit of pressure. So, but I don't know. If I had my druthers, I'd like to be refrain week long, go to sleep for 6 months, and not have to listen to all this garbage for the next 6 months. So, alrighty.
Hey guys, go visit Chris at therobinsonreview.com. It's up on the screen right there, just like it sounds, therobinsonreview.com. subscribe to his newsletter. Chris, thanks so much for being with us. We'll see you next Friday.
All right, take care. Have a good weekend.
All right, you too. Bye-bye.
Right out. Bye-bye.
Hang on, guys. I'll be right back. Okay. All right. Let's pick up where we left off. So, now, underway, what are our obstacles? We've got, if we look left, see this area here? That could spell trouble. Okay, that could be why we've got this little stall going on right here. If we use a little Fibonacci math to go here and to come here, potential upside target right there, 161.8. All right. That's a magic number if we believed in magic, but, you know, we don't. Look where it lines up, right at that 2060/61 weekly trading zone. So am I starting to believe that rather than this sell-off down to 32, 33, that the market could actually muster a rally and get through this? Well, we've got Fibonacci math telling us that from this low to this high to this retracement, we've already exceeded. You know, you hear Michael talk about leg lengths. Okay, let's take a look at the length of this leg. Okay. So based on leg lengths, we handily take that out. Actually, if we just, that's the entire leg. If we just take the last leg, which carries us from here to here, and then there you go. Okay. So is that a possibility? It is. What does it look like on a 4-tick range right now? Let's go see. Bullish cross, price pulled away, and right here we had a chance to draw a trend line. Up close. Here we go. So we'll come back. We'll check back in on that. We're way behind. Let's get going. We got to move it on up. Let's go to the Dow. The Dow. So bonds were an incredible day. Soybeans, $1,000 day. That's huge. It really is. Please speak of reference all the information regarding the OTAD, including the sign-up material. Oh, you just simply go to cfrn.net/1 trade a day. That's it. I'll show it to you on the screen. CFRN.net/1 trade. I know it's right below me, but I'm just giving you a chance to type it with me. 1 trade a day. All the information that you need is right here. Okay. Now, this is where you choose your markets. $75 per market per month. Minimum 2 markets. Month-to-month agreement. No long-term contract locking you in. If you ever need to pause your subscription, it's as simple as a mouse click. Give us 5 days notice. 2468 markets. S&P, Dow, Russell, bonds, crude, gold, euro, soybeans. Euro we took out because of the change. I've decided because of the volatility I'm going to put it back in. So we're going to pick up where we left off. I was going to put the NASDAQ in there, but gosh, I'm not sure. You know, I just don't know which you guys would put to better use. Now, once you place your order, you'll gain access to a password-protected page for the markets you choose. Use the form below to select the markets you want to trade. Must be signed, dated, and on file in our offices before we can give you access to your trades. Trades are published and waiting for you at 11:30 a.m. Eastern, Monday through Friday. Now, you must download or just print and follow the instructions at the top of the document you select. It's the same document. One's a Word document, one's a PDF, whichever's better for you. Be sure to circle the markets you want traded, because on Monday morning you'll get sent the password for the 2 markets that you trade. These are 2 versions of the same document. Pick the document you want. Once you have chosen your document, you simply need to scan it in and shoot it over to us. Scan it, email it back to support@cfrn.net. Now, when you get your passwords on Monday morning, you're going to go to Emini Futures Trading.com. Going to enter the site. And whichever market that you have chosen, that page didn't load right. There we go. Whichever market you've chosen, S&P, it will prompt you for your password, and then you'll hit login, and you'll have the numbers for today. Okay, so there you go. That answer all your questions, Bart, or are there any other questions? Well, it's right there. CFRN.net, 1 trade a day. If you'd like me to email it to you, I mean, I can. Happy to do it, if that's what you would like. Can you withdraw the funds from the same account that you use monthly dues. Yes. Yeah. Absolutely. So instead of it being $75 a month, it would be $150 and $75. What do we got there? $150 and $75. What do we got? 2 1/4. Yeah. Yeah. So it would just change from being 75 plus 150 to 225. Yeah, and that'll come right out of the same account. 10-4, 10-4. All right, and I am going to email you that link as I said I would. Let me just hit compose. All right, Bart, I emailed you the link. Okay. All right, so let's move on to the Dow so we can get this complete. YM, buy 176.15. Okay. This is where you do that, 176.15. Mm-hmm. $176.15. Okay, swing high was 176.74. So let's call it 75. Oh, there's 76. The swing high was 76. So we'll round it down to 75. The high was 76. We'll round it down to 75 because $75 minus 15 would be 60 points. So that's a 60-point move in the Dow at $5 per point. So that's $300 per contract. Okay. You need 20 points a day if you're trading the 2420 blueprint. Now the sell side was 17,650. Okay. There's 20. And there's 30. It should have been 17,530. Okay, that's pretty obvious. 17,530. Okay, wouldn't be a Wednesday night if I didn't make some kind of mistake getting ready for the partners meeting. All right, this first move down took us to a swing low of 20, 10 ticks, okay? Worst case scenario is if you put your stop up here, which probably wasn't a very good risk to reward ratio, kind of left you out in the cold. Now, if you did put your stop here, you didn't get stopped out, okay? You didn't get stopped out here, 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 you did. So, a stop here, however, made for a reasonable risk to reward ratio, and the swing low was 17,475. So that's a 55-point move. So we had 60 points to the upside, 55 to the downside. Okay. And then this little 10-point straggler over here. Okay. All right. After the Dow, going to go to Russell, which is always a challenge, but we'll go there anyway. Okay. Pretty sure we killed it on the OTAD today. And Michael speak. Let's see. Russell, last night we were looking to buy 1107, which was right here, 1107. And the first time around, we put in a swing high at 1110. So that's $300 per contract. And then the second time, because important prices, important areas are almost always tested, we hit a swing high of 1111. Okay, so from 07 to 11, that's the first move was $300 per contract. The second move was $400 per contract. We were looking to sell 1103, and selling 1103 got a little bunched up here. And the alert went out on this candle right here to sell 1103. So the first move down took us to a swing low of 1102. So again, that's a relatively big stop. If you took it, even though it was a big stop, you still got stopped out. Okay. Now, on this next move down, where we had a chance to put our stop right here, just above 1103, risking a point. We dropped from 1103 to 1097.5. So that's $550 per contract. That's what was available. And then we had another one here, good for about 500. Okay, so that's the Russell. All right, after the Russell, we need to go to crude oil. Crude. GCLM 30. Okay. And 2030. Okay. All right. Okay, crude oil by 44.65. That came into play right here. All right, first move up took us to 44.85. Okay, so we were looking to buy 65. 44.65. Okay, from 44.65 up to 85. So that's a 20 tick move, $200 per contract. And then price closed here. The question of whether it triggered here, we'd have to dig into a smaller time frame and throw the whole shebang out of whack. So let's just consider this a close below, and we won't worry about that. That offered some profit, but we'll just let it go. And we'll go up here and we'll take a look at 45.34. Okay, 45.34. $45.34 minus 44.65, and you got 69 cents or $690 per contract. 69 ticks at $10 per tick. And then important prices, important areas. Here we go again. This time we make it up to 83. 65, 75, 85 would be 20, so that's an 18 tick move. Now, how many do you need? How many? 10. Crude oil pays $10 per tick. At 10 ticks, you've got your goal for the day. Let's make that 20. It's $200, but it's 20 ticks. 20 ticks, 69 ticks, 18 ticks. Now, on the sell side of crude, we were looking to sell 44.20. Okay? That came into play right about here, where again important prices and important areas are almost always tested. 44.20. All right. So the first move down took us to swing low of 43.73. 44.20. And the first move down went to 73. So that would be 25, 45, 47 ticks at $10 per tick, $470 per contract. And price gets back above and then back below, and this time we put in a swing low down at 43.54. So we're going to use the old calculator just to get it right. I think it's 95. I don't know. We'll soon find out. 44.20 minus 43.54. 66. Okay. Not exactly 95, but God bless calculators. All right. So on the sell side, things went well. On the buy side, things went exceptionally well, leaving us with the freedom to go to the NQ and check what happened on the 30-minute chart. Okay. Now, these are current weekly zones. 94, 95. Make sure if I'm going to say that. 94, 95. Why no? Oh, 42, 94. Okay. Yeah, those are current weekly zones. And I almost had a current daily mess on my hands. Thank goodness didn't. All right, so let's go to 2030. All right. Okay. NQ. Gonna buy 4302. It's gonna be right along here. Drop it down a couple ticks. 4302. That do it? Yep. Okay, so the first time we poke our head up from 4302, we get up to 4310.75. 4302. Now that's 8 3/4 points. 8.75. This move took us up so far to 43.2350. So we'll call that 2150. How many do you need? If you're trading the blueprint, you need 5. The NQ pays $20 per point. It's inverse of the Dow. The Dow is $5 a tick. You need 20 ticks or points. And with the NQ, it pays $20 a point. You need 5 points. Okay? So 21.5 ticks, points at $20 per point. So roughly a $400 per contract move. Okay? All right. On the short side, for the NQ, we're looking to sell 42.92, which was snug as a bug in a rug right up under here. Do it? No. Almost can't get close enough. Oh no, I can't. I go the other way. Huh. Come on now. 42.92. All right. Drag one end of it down. Let's just call it 42.92. And then we don't have to fluster with it. Okay. NQ 42.92. All right. So from 92, drop to a low of 42.83. So that's 9 points. How many do you need? 5. And then we drop to a low 71. So that's 21 points. How many do you need? 5. And then we get above, and then we get back below. 92 down to 75. And then over here we get down to a low of 42.77. So we can see that these are all more than enough to reach your goal for the day if you're trading the 2420 blueprint. Okay, so after the NQ, moving right along, let's go to gold. Gold's up big today, so I expect great things. 2030, right there. And our plan of attack for gold was to buy 1281, which came into play right here. $12.81. Now, if your stop on this first trigger was right here, where it should be, if you spent any time with me, okay, you were in the trade for an extremely long time. You might have got tired and taken your profit here. You might have got tired and taken your profit here. Or you might have let it run because it went from 81 to 96. That's $1,500 per contract. Okay? That's what the market made available. $1,500 per contract available. Okay? And then after this deep pullback, it continued a little higher, but anyone who is manually trailing the stop or using the indicators on this pullback, you're going to get taken out. So let's not kid ourselves. This was reality, okay? Lowest risk, greatest reward. It repeats again and again and again. All right, let's go to bonds as we wrap this thing up. We already had a look at this from 165.24 to 166.16. All right, there's 32 ticks to a point, so 24 to 32 is 8 plus 16 is 24 ticks. So this is what we're looking at, 24 ticks. 31.25 per tick. $24 ticks. Now, at 32 ticks, that would be $1,000 per contract. But that's not what this is. This is 24 times 31.25, and so you get 750. That's what the market made available. Now, it ran up and ran back rather rapidly this morning on the employment news, the jobs report, etc. And so this is a situation where you have to be trailing your stop to not end up holding a goose egg. Okay? And then over here at the sell, 164.29, so far nothing's happened except we got triggered by one tick there, 164.28. Yeah. Okay. And so this could be a stop out. Now that depends if your risk profile allows you to put a stop loss here. Why? Because that's where the market tells you the stop loss should be. This could be a situation where the market says walk away. Okay. If you want to learn more about that, sign up for a mentoring session. We'll go through it, and I'll help you understand how that works. Last but not least, soybeans. They've outdone themselves. They now have climbed to 38.50. 38.50. So that's going to be 25 cents. Per penny today. So that's well over $1,000 per contract. That's what the alerts offered you last night. Numerous opportunities, market after market, to do, I assume, what you come to the markets to do, and that's to extract some of the world's wealth and claim it for your own. Okay? If you haven't taken a free trial, don't go there right this moment because I haven't reset it for the week. But later today, go to apply.cfrn.net. apply.cfrn.net. Okay? Now, you see where our target is. You see where the market is. Now, we're talking about, it's almost 3 o'clock on the East Coast. So there's an hour left. In an hour, can we overcome this and see this? Maybe not. But if we end on a bullish note, then be prepared Sunday night for the completion of this move. I mean, if this thing gets halfway there, stalls out, markets close, everyone goes home for the weekend, that could be a gimme on Sunday night. Because you already know what's overhead, you know where the resistance is, you know where a math-based Fibonacci target is, and you understand all the proper reasons why. But you also know that the last time price touched this area, what happened? It was turned away. And then it bounced and got just about where it is right now. So you see it's really struggling with this area here. Whoever told you support and resistance was dead, they had ulterior motives, I guess, because it's so obvious each and every day. Don't let anyone take that away from you, okay? At any cost. All right, it's the weekend. What do we do on the weekend? We spend quality time with our family. And of course, I'll see you all in church on Sunday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you. There was a question here, Bart. Can you show the OTAD in Crude? No, because there's a current trade on right now, Bart, and it was just issued at 11:30, and so I really don't prefer to show those. Now, Michael showed one last night because it had had a chance to play through, but this is sort of in action right now. So out of fairness to those who have subscribed, I mean, I'm just trying to be fair to them, okay? Not that it's that big a deal, but it just seems like the gentlemanly thing to do for the people who have, you know, I mean, Michael showed you the whole page last night, so you've got, good Lord, 50, 75 to go through and see, you know, what happened, right? I mean, it's on the video, which I plan to post later, but I haven't got around. What just went wrong with my screen here? Issues. Always issues. Now, you were curious. You made me curious. Where's my Crude? I think this is my Crude. Yeah. Since 11:30, we haven't triggered yet. So I guess since we haven't triggered yet, I can say that much without offending anyone. We came really close to triggering, but we haven't triggered. There's still time in the market for a trigger, though. So that's the story on Crude. No trigger yet. And there will be days when there won't be a trigger. There'll be other days when, as Michael says, well, he's been doing real well with it. I think yesterday was a $600 move per contract. So if you've earned the right to trade 5, 6, 7 contracts, you know, one good day could set you for the month. Depends upon what your outgo is. All right, let's try this again. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.